While the prospect of even lower interest rates in Australia could further weaken our currency, it may have the opposite effect on the property market. Rates are already at record lows, prompting developers to rush to build new housing over the past 12 months. But as construction nears completion, what will that mean for property prices in 2015, and where will the hotspots be? Australian property prices surged 8.5% over the past 12 months. According to CoreLogic RP data, Sydney and Melbourne enjoyed double-digit growth. Despite that, BIS Shrapnel Chief Economist Frank Gelber says we're not in a bubble, rather a cycle.
We needed the price rises, particularly in places like Sydney, in order to stimulate building activity, because we'd been under-building for a long period of time and there's a huge deficiency of residential stock.
Price growth is likely to ease next year. Researcher Louis Christopher expects a 5 to 9% increase nationally, with some areas outperforming others.
We believe that the three regions around Australia where we're going to see outperformance or really good capital growth will be some of the outer ring of Sydney, particularly the west, the northwest and the upper north shore of Sydney. We're expecting the Gold Coast, Brisbane corridor to outperform, and particularly the Gold Coast itself. And we're also expecting Hobart in Tasmania, particularly central Hobart, to outperform.
He believes the underlying factor will be the lower Australian dollar. When
you see a lower Australian dollar, you generally see a better economy, particularly in the tourism area, so hence the reason why we've picked the Gold Coast and to a lesser extent Hobart.
Property researcher Mike Anderson also likes parts of Queensland.
Look, the hotspots for me in 2015 would be in Brisbane first and foremost. I'd be going to the northeast of Brisbane. I'd be then looking at the southeast of Brisbane, so radiating towards the coast. The third area I'd look at is back in New South Wales, where the greatest stock deficiency is still located, and I'm looking at the Central Coast, Sydney's little brother, which will benefit from the spillover effects of the rising market.
He says infrastructure developments, along with demographic changes, are providing opportunities in some parts of Brisbane.
I'm looking at the largest market of buyers coming through the next 10 years. They're downsizers, so let's buy today what they're going to buy off us in the future at a higher price.
But experts warn growth will be patchy.
We're expecting another bad year for the Perth housing market. We're expecting the mining towns to continue to be weak.
As supply catches up with demand in certain areas.
Part of the Melbourne market is oversupplied.
That means some renters may hold the upper hand next year as investors deal with lower rental yields in some parts of the inner city markets.
People who are concerned about the property market are more concerned about vacancy rates.
And we believe that we'll see a rise in vacancy rates in the inner Sydney area, which will put a dent on rental growth.